Well, it looks like the time has finally come for the BNPL sector to have its meltdown. I'm filming this on Wednesday, the 2nd of September, in the middle of the day. It's about 11 a.m. So by the time you guys get this, you will know the result of what's happened in the market today. We're about an hour into the trading session, and all I see is red on the buy now, pay it later sector. The rest of the market's not doing so bad, or some of the other stocks that I'm watching. So I'll get to those in today's video, but I just want to go through the buy now, pay it later stuff because we've covered it extensively throughout this channel over the last couple of months as it's been going hot. I have copped a hell of a lot of flack from it, talking about reasons why I don't like the look of it to buy into it as a long-term investment right now. It's not to say the companies suck, but it's just what I am seeing in the charts. And that is what we go through on this channel. It's technical analysis, looking at charts, and we focus on looking at when the best time is to buy and to sell. If that means waiting, if that means having some patience, that's what we do. We don't cover the fundamental analysis of the company in detail. There are plenty of other YouTube channels that you can get that information from. But we just want to find out when is the best time to be buying something, and should we be looking elsewhere in different sectors if they have better opportunities. So if you're new to the channel, my name is Jason Pizzino. Be sure to subscribe down below if you're interested in investing, personal finance, trading, all that stuff related to money and how to understand it and get more of it. So what we're going to do today is go through the buy now, pay it later stuff. I will touch on just a tiny little bit of different news that I've found. And also I want to talk about cryptocurrency. I know you guys absolutely aren't that interested in it, but there are a few people that are, and I'm just seeing much better opportunities in other markets that we can trade and understand a little bit more of. So before we move on, if you haven't already, touch, smash, lick, scratch the like button. Hit that thing down below, make it go blue, make it go white, whatever platform and device you're on, click the like button. I'll mention it one more time in the video, maybe twice. With that said, let's dive across into the charts. Here we are at the charts, and I'll mention, as I usually do just once in the video, tradingview.com. You can get a link to the software, the program that I'm using in the description down below. It's all free. That's why you'll see ads pop up. And if you don't want ads, you've got to buy the subscription to the trading platform. Let's move across into the first thing, and I will touch on cryptocurrency first because I want you guys to see this. Ethereum, it's gone bonkers as of yesterday, but it's been going bonkers since pretty much July, but this continues to break out of all of the bear trends. So what you can see on the chart at the moment, you got the first bull breakout, which was back in July. Still not too late. It was $230-ish, about $240, and it's almost doubled now. We're in the 2nd of September. We're at $470, and it's just broken out again through another resistance level. Basically, Ethereum, I put something up on the YouTube community section of my channel, and that was just talking about yield farming, and the guys are making huge returns on that. Super risky, but I know some of you love your risk, so go and check out yield farming if you're into that risk, getting 50% returns per annum, 8% per day, all these sorts of things. Let's move across in the charts, and I will make this one a little quicker than I usually do. First thing I wanted to mention is there's another buy now, pay it later company looking to join the ASX listed BNPL stuff. So it doesn't look like ZBit or Zebit is going to actually have their product in Australia, but it looks like they just want to get investment from Australia because Australians love BNPL, and they're basically based in the US. So to me, this is really just showing how crazy the sector is when companies from elsewhere are just coming in. They're going to get some more money from investors because they know that we love to gamble on these sorts of stocks. Moving across to the charts, which I will run through quickly, as I said, AFTERPAY. Now, I'm glad that I waited for the market to open today so that we could see this bar. I'll scroll in, zoom in a little bit more. You can see this bar right here. Yesterday, that's all we had. Now we've seen it just break and break and break down. And the news the other day, we had videos coming out, will Afterpay make it to $200, $150? Everyone was making them. I'm pretty sure I probably put something else out there about it. But that is the time that is potentially the end of the trend. Now, how do I find that out? It's basically just measuring the ranges that we find in comparison to what we've seen previously. It could be the end of the trend short term. Short term could be weeks to months, and it could just find its level out here between $68 and $78 in that range that we've been looking at after it broke out of that range before. But I think we could be in for a little bit of a fall from here, which is why I have said all along it's not something that I'm interested in buying, and that goes with all of the buy now, pay it later stuff. When we first looked at this, yeah, it could have been a trade from breaking out of 75 and maybe made 20%. But if you did not have a strong plan, like an exit plan, then you could be looking at getting burnt on this particular trade. So be wary of all of these stocks. They look like they're falling through their bull market, basically support on the way up. Now, I've just got that line there, 75 bucks. I would want to see it hold above that and create some consolidation before it moves on again. If it doesn't, then to me, that's a sign of it breaking down. Let's move across to OPENPAY. And OPENPAY, let's get rid of the ads. Again, this one's broken down pretty heavily. That was a solid fall from yesterday. Look at the volume. That's what I've got here. I'm just going to mention a couple of quick things on all of these because I've got a lot to get through. Look at this here. So we've got the volume for the rise up in July compared to the volume that we've seen in August for it to come back just to that top. And it's starting to break down through all of these diagonals. Horizontals are stronger than the diagonals. So, we can put something there at around 340-ish, but we definitely don't want to see this volume get any lower. Basically, that just means that the energy of this market is starting to fade. And when it fades, it means there's not as many buyers. And of course, the buyers are the ones that continue to push the price up. Let's move across into SPLITIT. SPLITIT, seeing the same thing. So SPLITIT's falling as well. $1.59 currently at 10 past 11 in the morning. So this one has fallen back into its range. Not as weak as the others, not as strong. It's kind of on the edge here because it didn't push up as much as the others did through that previous period in August where they started to push up even higher. $1.35 is something that we've covered in videos before as a support level, and if not, then I'd probably be looking way back here at $1. If it breaks this low here at $1.15-ish, back to $1 at those highs, and it's something that I would definitely have a tight exit strategy on if I was trading this stock here. SEZZLE, moving across to another one. Now, get rid of these ads, and we see SEZZLE's just gotten crushed. It's amazing how much these have fallen. If we just take the absolute high of a 1183-ish to where it is now, that's down nearly 35% to its current closing price of $7.74 at trading at 11:10 a.m. Now again, this one's fallen back into its zone. We were looking at it as a bit of a triangle pattern through here, and then when it broke up, that was a little bit of a trade, but for me personally, too high risk at this point to be wanting to hold this long term as an investment. So let's move on to our final BNPL, and that is ZIP. Now, sure, I could have a little bit of fun with this and say, see, I told you so, but I could have been just as wrong. So I'm not going to get into that childish behavior, even though that's, kind of what I do. Anyway, that aside, this one was too high risk for me. We're basically back to where we are just a few days ago, essentially, maybe a couple of weeks ago. And we do want to see it hold up here. We want to see some support in order to resume this bull trend. If I don't see this hold some support, then I definitely think it's going to break down even further, and that could just be the first of its run. That could just be it for ZIP. Now I've got this circled back here. When I say that's it, I mean it for the time being, because obviously these companies have got a lot going for them. There's big potential to make some profits for the companies and obviously the shareholders, but everything just goes through cycles. You had a huge leg up, resting period, didn't do anything here, took off again, only briefly, and then basically rested, came right back down, rested, and then tanked. Will we see that again? It's looking like it's possible that this could happen again. Now, I'm not saying, crap the bed, crap yourself, and just jump out of everything, because you should know by now this is not financial advice. Edutainment, which is education and informational purposes only. So it's not financial advice. Basically, that's what I see here. When you got such a big dump like that, that is not something that I'm very interested in waiting around or trying to buy the dips just yet. Around what we said, about 35% so far. And if I look back, then we could potentially see some sort of fall to the extent of, what have we got there? 70, probably 80% if I move that out of the way. But look, this is just part of the game of getting into something new and into a new sector. It comes with huge gains and potentially huge losses. Let's move on to another few and I'll wrap it up from there. This one's been mentioned a few times, 5G networks. Now, it's not crashing like the buy now, pay later sector, but I do see some similar trends here, and it's almost an exact repeat where we look at the percentage increase is around 350% from its low points to its high. Look at that, almost dead on the 350-ish if I can get those to line up. 330, if I get the bottom, it was around 350 when I last looked. This one here is about the same from the bottom to that current top, 350%. Now the down periods are almost the same as well, 65-ish, and the previous down move was about the same. There you go, 60, 59, 60-ish. So can we expect that to happen again? Past performance isn't an indicator of future, but personally, I think there's a potential for that to come back quite some distance. And it kind of lines up with some of our levels here at that dollar mark, maybe a little bit further to these previous lows that you can see here that were set in, and that is around 60%. So if that happens, we're looking at around 90 cents to $1 for 5G networks. I like these areas for potential support because they are the first swing out of a low. There's a major low, there's a first high, and there's the first higher swing low. Those things are super important when it comes to swing trading and technical analysis, a first higher swing low. And so that's why I don't think those areas would be broken, especially if this market's going to continue up in the future. This is just a period to flush out all of the people that were trying to get in on this and make some huge gains. That's pretty much what these times do in markets. 5GN, quickly before we wrap it up, SELFWEALTH is something that we looked at on the channel probably a couple of months ago now, and this has continued on its up leg. It's moving ever so slightly and higher into the dollar area, and we first looked at it when it was around 30 cents. Now, it wasn't a buy alert, nothing like that. It was just something that I found when I was looking up stockbrokers in Australia, and SELFWEALTH, obviously they are getting some good gains because a lot of people are in the stock market right now, especially new investors, especially retail investors, all that sort of jazz. So look, the volume isn't as strong as this previous move, so it's potential that this isn't going to play out again like this full solid move. I would again be wary of this one, but I want to keep just tracking the price of it. Not something that I'm looking at to buy now at all, but I'm definitely keeping an eye on it. Last thing I want to have a look at, because it's in a similar sort of pattern, BRAINCHIP. Do you see that? That is a hockey stick. It's just straight up in the air. Can it keep going? For sure, but time usually tells us that it may not. I'm not saying get out, because this is something that we covered when it was around 17 cents. I thought it was going to come back to 14 for a little bit, but this thing had so much strength in it, it continued on, and that's why we had a trade at around 22 cents as it broke the top. I think it was around 21. And from there, it hasn't doubled. It's done pretty damn well, up at about 80 odd %. Now, it's not something I would get into this late as well. It's definitely something that I would just keep on the lookout, keep it on my watch list, and just keep waiting until this thing comes back. If it does, great. If it doesn't, move on to another stock. That's it for the charts today. I know I've covered so much in such a short period. I'll wrap it up there and get on with the summary. I hope you enjoyed that quick look at the buy now, pay it later sector. I think it was important to get a quick video out today for you guys because we have covered it many times in videos before. Want to look at how these markets are unfolding, because all we've seen in the last couple of months is them go straight up. And when times change, we need to be alert, need to be ready for it, and need to have our plans, if we are trading, to get out. We should have those things already done before we get in. Now, if you're investing in them long term, I hope you can stomach 60% losses, 80% losses, whatever they may be. Maybe they were in your plan initially and you're like, look, it doesn't bother me because I can see them going up a whole lot more in the future. Just keep that in mind, because this sort of action, technical analysis, the look at the charts, it doesn't look too healthy right now. So just be safe out there. I know it's not financial advice. I'm basically just trying to educate in the way that I was looking at these charts back when I first started. Just simple support and resistance, and be sure to have a plan there in case times go against me. Guys, thank you for all the love on the previous video. Let's see if we can get this video to 250 likes. To the haters, I am really running out of time to answer people on comments, so the haters are going to be left till the very last, if I ever answer them at all. But to all you guys giving me great support, I really appreciate it. And if you want to give constructive criticism, obviously that's very much welcomed. Leave it in the comments down below. If there's something else you want to see, of course, let me know in the comments down below. I'd love to chat with you guys there. Got plenty more coming out for the channel, so stick around. Another video, another live, all that sort of good stuff. I'll catch you guys at the next one. Be sure to like it, subscribe, share it with a friend that you think will find some value from it. And I'll be sure to see you guys at the next video. Catch you on Instagram, Facebook. But until then, have more fun to get more done. Peace out.